Hello, everybody. Welcome back to another Market Open. It is May 31st, 2023. We are here, and it is time to open up the markets. It's another day to be alive, another day where we get to live on this beautiful planet that is called planet Earth. We will not be here one day, and we are here today. And if we are here today and we have the global financial markets in which all of us are trying to make massive gains and gain financial freedom, then it's time to analyze that market. Welcome, everybody, and welcome and good morning to the Market Open. Good morning to the audience. I don't even know what the words I'm saying. Here we go. Everclear, what's up? Dan Harkness, Mike Oxford, Tyler Exclusive Technologies, Torben, Reza, Ahad, Stefan, Walter, Jaden, Power Napster. Hello from Germany. I went to Stuttgart at one point in my life. Was awesome. Thank you all for being here. Ryan, Afton, Joseph, Salman, Jake, Arbin, Johnny, Afton, ZTZ 2002, Ray. Thank you for being here. Quarantine Quartet, Jason, Dario. Hello, beautiful people. That's the energy. That's the energy this morning. Hello, beautiful people. We are here. It is another day where we're alive. It is time to wake up, get energized. We got some shit to do, except if you're in a different part of the world, maybe you're about to go to sleep. So you've got some shit to see before you go to bed. And it's time to wake up and see what we got going on in the market. Thank you all for being here. Appreciate it. It means the entire world to me. 160 people being here. All right. We've got a lot to talk about. We've got to talk about the new Palantir partnership. We've got to talk about a Palantir SPAC that went bankrupt. I'll spend a little bit of time on that. I'll do a video on that later. I know some people are still curious. Just we'll give you guys the details for it. We've got to talk about debt ceiling negotiations. We've got to talk about a pullback. A pullback. We are backing up the pull in the markets. I'm looking at my second computer right now, and I see a lot of stocks that are down pre-market. The biggest stock that is down is Nvda. Nvda was at 415 just yesterday. Now it is at 395. I think that pullback, especially when it hit 86 on the RSI, which is the relative strength index from the technical perspective, is leading to a lot of other stocks being down. And that's why we are seeing a little bit of a pullback in the market. First thing we've got to do is get into the new Palantir partnership. I am so effing ready. Mike, thank you for being Roy Dominic, my girlfriend's brother ate my... Okay, that's one of the most interesting comments this morning. That's great. I love it. Here we go. Palantir and Jacobs have announced a new extension on their strategic partnership that they introduced in March 2022. We've got 8 minutes to the market open. I'll do a separate video on this a little bit later today, but let's analyze this at a top level, at a sort of fundamental level, and then we'll go deeper from here. Now, Palantir's AIPCon is tomorrow. I will be live streaming the whole thing on this channel. I don't know if it's like 6 hours long. I will be here the entire day. And Jacobs is going to be one of the companies that is going to be presenting at Palantir's AIPCon. Now, Jacobs CEO says, while we have understood the power and promise of AI for years, we saw clear challenges with secure deployment. With Jacobs' continued focus on data solutions combined with our deep domain knowledge, we're enabling AI to create value for our clients. Jacobs, for those that don't know, is a global consulting engineering firm. Our expanded partnership with Palantir is a key differentiator in bringing built-in transparency, guardrails, security solutions for our clients in a time horizon measured in weeks, not years. I am very excited to see what Jacobs is going to talk about in the conference tomorrow, because I think they're going to be able to explain how AIP is really unlocking the value of their business. Building on Jacobs' use of domain-specific algorithms with Foundry in its water sector, remember their partnership back in March 2022 was water infrastructure. The company is now incorporating Palantir AIP, that's their newest platform, to unlock unprecedented speed, greater efficiency, and more informed decision-making for their clients with security control and auditability at the forefront. I've never seen that word before, auditability. That's awesome. We are already deploying AI to optimize the entire water lifecycle, from day-to-day management to long-term planning and design, and now we're diving deeper across new sectors. This will allow our clients to make better decisions today, tomorrow, and in the future, creating a safer and more sustainable water and sewage system for us all. Palantir CTO Shyam Sankar says, through the adoption of Foundry and AIP, Jacobs is delivering end-to-end AI-powered solutions with real-time computing power, actionable data, and control. Our previous success in helping Jacobs clients achieve efficiency improvements in energy utilization and chemical usage is only the beginning. Now, what does this press release mean? We're going to go to Big Daddy Sachin, who is going to give me the content to analyze, because he made a Twitter thread about this. And if you haven't followed Sachin on Twitter, I recommend following him. He's going to be breaking down what this means. Jacobs and Palantir are expanding their partnership. They're doubling down on their commitment to commercialize AI solutions across critical infrastructure, advanced facilities, and supply chain management. We already talked about this quote. He says, this collaboration leverages both Jacobs' deep domain knowledge and Palantir's powerful AI capabilities combined to create secure and impactful AI solutions. Jacobs has been successful utilizing Foundry's domain-specific algorithms. Now they're moving on to AIP. And in conclusion, this partnership is all about unleashing the power of AI in a broad spectrum of sectors with a focus of security, control, auditability, and the next stage of AI-driven solutions. The key thing Sachin told me this morning when we were talking about this is that this is a repeat client. I think this is the biggest thing to understand on the Palantir partnership. Jacobs already partnered with Palantir back in March 2022, and they're continuing to utilize that partnership to take it to the next level. So this is a client that said, hey, we're going to use Foundry to build out our entire suite of operations when it comes to water infrastructure and data-driven decision-making. Now, this AIP shit that you guys just put into the market, we're going to incorporate that into our business. One could imagine they were one of the beta testers over the past 6 months utilizing AIP, and they're seeing results from it. And I think, if the market wants to give Palantir an AI premium, you've got to see clients being able to say, hey, we're using Palantir's AI software and it's making us better. We're paying more for it. It's a stickier product and we can't imagine using anything else. And as a result of that, I think this is going to be a really interesting partnership to be able to see over the next couple of days. So I'll be doing another video more in depth on it in a little bit. We got the market open in 5 minutes. Let's take a look at some charts. But really good partnership for Palantir. Happy they're announcing it now, a day before Jacobs actually speaks. And tomorrow, that conference is going to be so important just to utilize and sort of, to sort of measure the effectiveness and the magnitude at scale of what this AIP platform truly means for some of these clients. Because if it is what we think it is, then the market might be willing to give Palantir a little bit more of a premium as well. Okay, we've got Palantir obviously down in the pre-market. So I think the biggest news of the market is that stocks are down. We got Palantir down $14.20. It ended at $14.70 yesterday. So it's down 3%. Google is down. Microsoft's up just a little bit. Snowflake is down. Super Micro Computers is down. Nvda is down. Meta is down. SoFi is up a little bit, but at one point it was $6.50 in the pre-market. So it's down a little bit from its pre-market highs. And Tesla is down as well. The NASDAQ, we'll see if it opens below 13,000 or it stays strong at 13,000. Now, why are we getting a pullback? I think there's a little bit of instability in the debt ceiling negotiations, even though the market kind of priced it in yesterday that it's going to pass. It has not passed. And from what I've seen, there's a little bit of like uncertainty of if exactly it's going to pass, even though it's probably going to pass. And also, we're probably just due for a little bit of a decline given the momentum that's happened over the past couple of weeks. I think Nvda falling, which is basically what rallied the rest of the market since last Friday, is also what's leading to the decline in some of these stocks that we're seeing here today. And so we're going to see at 9:30 how this market opens up and how we go from there. Why is SoFi ripping? The student loan moratorium being lifted has opened up a new investor class, I believe, for SoFi. They're going to originate something like $80 million a quarter in like top line revenue. That's like another $320 million a year. I mean, just out of thin air because of all the refinancing that's going to happen of student loans. And I think the market's really respecting that. And so it's that's why the market is pretty exciting there. Good morning, Amit Turkstein. Good morning. Good morning from Santa Barbara. That's awesome. California. I love it. John, good morning. Thank you for becoming a channel member. I see you are green now. I just opened channel memberships. So if anyone wants to join, you can do that. When do you wake and sleep, Amit? I slept at 1:30 last night. I woke up at 5:30. So it's I got a good 4 hours, but work has to get done. So you got to get up and you got to start working. Hello from Dubai. Awesome. Hello. Thank you for being here from Dubai. Hi from Germany. Karsten Ruzoskiski. I said that so wrong. I'm sorry. But thank you for being here. Morning from Canada. I love it. Thank you for being here. Will there be a pullback today? We've already seen the pullback. And look, to be honest, if there's a pullback today, I have a lot of cash ready to go. There are some strategies. On SoFi, I want to buy a little bit more. I have some options that I want to get at some cheaper prices. I loaded up some options yesterday. Yesterday was a little bit more expensive, but I still wanted to get them. I want to get a little bit more today. We'll see how it goes. Palantir, I'm waiting for a little bit more of a pullback before I decide I want to utilize some of the capital on Palantir. We're going to see, I think this AIP demo tomorrow can send it to a really strong place if the market respects it. But if the macro is not in our favor, which it seems like in this market, the macro is just not in the favor of any stock, then even AIP is not going to be able to save it. Again, I really think Nvidia dropping, because remember, why did Palantir and C3 AI run? It's because of Nvidia. I mean, Nvidia's guidance on AI basically showed these high frequency trading algorithms to get more exposure to AI. I have a friend who works at one of these hedge funds. And by the way, he's able to take like 70% of his salary and put it back into the hedge fund, and the hedge fund returns 70% year over year. So it's like an amazing deal that he has with the hedge fund. He was telling me about it. I could imagine them coding in the letters AI into their algorithms to build out and then just index any stock that has to do with AI, which is maybe why C3 has gotten so much momentum. I think that's more retail than institutional. But this is my hypothetical analysis that, like, what if this is part of the reason why when Nvidia went up and AI was triggered in all these algorithms, then all these other AI stocks kind of rose with it. C3 AI was up 35% today, or yesterday. It is down 6% in the pre-markets. Earnings historically have been horrible. I don't think earnings is going to be that bad today after hours. I think they're going to capitalize on this, but we'll ultimately see what happens. And as a result of that, then we're going to see kind of where the market takes it from there. All right, 9:30 a.m., May 31st, 2023, last day of May. After this day, we are officially 6 months into the new year. Let's see what we get. The market is now open. Wake your ass up. Here we go. C3 AI down 5% in the market. Palantir actually holding up not that bad. Down only 3.6% at 1420. So Palantir, and remember, it was at 1380 on Friday. So still a nice little gain from Friday. SoFi is up a little bit, but it's down from the pre-market highs at 651 at $6.18, up 2.5%. Let's keep going from here. We got Snowflake down at 158. Enovix, $13.26. They do battery technologies. We talk about it a lot on Finance Junkies. They are up slightly today. Super Micro Computers. This is a stock Chris called at $70. It's at 224. Even he did not expect it to run up to 200s. You know, when it went to 160, he was pretty happy. This one is down about 4%. Enphase is down 0.14%. S&P 500 is no longer at 420, so it can't keep getting higher. It's at 418 right now. Hope you guys got that joke. PayPal, $62. Amazing. PayPal was below 60 just a couple days ago. Tesla, 201. NASDAQ, below 13,000, 12,975. We're below 13,000 on the NASDAQ. DNA up 13%. I don't know why DNA continues to rally, but it is continuing to rally. Maybe somebody knows something about DNA because this stock has been in the gutter for a while. So maybe there's some stuff that's going on behind the scenes and some institutional investors have figured that out. But DNA right now, at $1.73. I still don't think this is a buy. I think we have to see some more execution by management because the risk is too high given how much insider selling happened over the past year from management. Bitcoin at $27,000. Apple, $177. Why is Apple up from about $173 where it was trading at last week? The Worldwide Developers Conference is going to be June 5th. They will be announcing a $3,000 virtual reality headset and the introduction of the XR OS, which is their basically like, you know, they have iOS for the iPhone and Mac OS for the Mac. They're going to now have this virtual reality OS. And Wedbush is expecting them to sell 450,000 units in the first year, times $3,000. That would be the revenue for that type of product. And if it's successful and they sell more of that, then, you know, there's maybe some more legway. I have personally said I am publicly very bearish on VR and AR. I don't think it is the next computing platform. I think it will have use cases. Don't think it's the next computing platform. So we'll see what happens there on Apple. Disney, $87, still trading at about 100 times price to free cash flow. Not excited about this stock at all. I know people have asked about my opinions on this. Hulu merging with Disney Plus to me is a sign of weakness because they don't have the content to be able to justify this subscription. I think the only reason I have Disney Plus is because Verizon pays for it every month for me. Disney Plus is down a little bit as well. And Wejo, quick thoughts on this. This company has officially filed for bankruptcy. This is a Palantir SPAC. The reason they filed for bankruptcy is because they couldn't keep it going. This is a company that was never supposed to go public, in my opinion. They SPAC'd at $10 when interest rates were zero. As interest rates rose, they just didn't have the fundamentals to keep it up. And I know the people at Wejo personally. I've talked to the CEO. I think he's a great guy. I think he had really good intentions. And building a business is hard. So at the end of the day, it's a really tough thing for Wejo. The exposure to Palantir is going to be very little. There was a great tweet today. I'll pull that up in a second for what this exposure looks like. So I think the exposure to Palantir won't be that big. I'll do a video on this a little bit later. But, you know, congrats to the Wejo team for at least, you know, trying to take a company public and do what they need to do. Obviously, it's tough when the global financial markets completely change on you. C3 AI is down 10.49%. If you were in the stock, I hope you had some trailing stop losses because this bad boy was going to come down. I don't know if it was going to stay up the way it was up at that time. Oh, Palantir's at 13. Do we got Palantir at 13? It's down. Palantir at 1388. Palantir is down 5.64% as well. There we go. Palantir is down right now. Just pulling up my portfolio, looking at some of the stuff we have right here. Oh, wow. Yeah. Yeah, there we go. Palantir is officially down. Let me do, just checking that right here. Okay, so Palantir is down $13.89. So there's a 5% decline. So we're under 14. Under 14. There we go on Palantir. Snowflake is at 158. Now, I think the decline on Palantir might be a little bit more aggressive today because remember, it was up like, you know, 30, 40% in the past couple of days. So when we see a decline on that, it might be a little intense, but it's still holding strong at 1380, to be honest, versus C3 AI. This was, I mean, anyone could see that this was happening, right? It was going to be down 11%. This was pretty obvious. Nvda fighting back to 400. This is surprising me. Nvidia fighting back to 400. So Nvidia is not going away that easily. It's staying up pretty strong, and it's continuing to do what it's doing as we see it. SoFi also, look at that, up 6%. SoFi is fighting like an animal. SoFi is not going down. Look at that. All these AI stocks, Tesla, the overall NASDAQ, Unity Software, which you could argue is an AI play. All of these are down. Some of the regionals are down. SoFi is the one bad boy that's up. SoFi's not going out right now. And I think that student loan moratorium passing has a lot of investors really excited for what they're seeing right now. Palantir will snap back before you know it. We'll see. Again, look, I think all of us knew that Palantir, the momentum was going to come down just a little bit. So here was the thing yesterday. I thought at 1480, the path to 1617 with the momentum is there. The problem is the momentum has to remain because remember, Palantir did not rise because of some revenue growth or anything like that. There was nothing fundamental about the rise. The rise was purely driven on AI being this new cycle in which how investors would want to allocate portions of their portfolio. The video I did yesterday with Dan Ives in the thumbnail, I really tried to analyze why the stock is up. And I came to the conclusion, Wall Street thinks 5 or 10 companies, really you could say 10 to 20 companies are AI oriented and 5 to 10 of them are going to win in the next 5 years, but they're throwing their bets at all of them because of what they're seeing with Nvda. And they need to consolidate portfolios, just like in 2022 when they consolidated from growth to value, right? That's just what happens because they're short-term driven. If Palantir is an AI momentum stock, it's going to be there as long as the momentum is there. If the momentum is not there anymore, then we're going to see a bit of a pullback. The question to me has been, how bad is the pullback? Is it to 10? Is it to 9? Is it to 11? Is it to 12? If it's at $12, the stock was at 7 on May 4th. 7 to 12 is still phenomenal if we can hold 12 bucks. You know, it looks bad going from 14 to 12, but that's just because we were all high at 14. But still being at 12 is amazing. If we went from 7 to 12 over the course of 2 months, we would be ecstatic. But it happened in the course of 2 weeks. And that is sort of the differentiator between the like sort of market psychology in terms of how we think about everything that's going on. Are you looking at cash secured puts on SoFi or are you looking at buying at calls? More about buying calls. I am not looking at cash secured puts right now on SoFi. So that I don't even know what the premiums look like, but I would imagine the premiums today are crap because today's a green day, and on green days the cash secured puts don't pay the best premium. Palantir back at 14. Oh my goodness, it's fighting. It's doing such a good job, just like fighting hard and not falling back as aggressively to like the 8s or 9s or 10s. It's really done good, just holding on to this momentum. Now we'll see where it goes from there, but on a pretty red day, it's not doing as bad as some of these other stocks. C3 AI down 10.5%. Nvda down just barely. It's under 400, but it's not as bad as we thought it would be. Meta hit a 52-week high yesterday at 264. Now it's at 258. Enphase at 173 was stuck at 161, so it rallied yesterday up to the 173 range. And what else do we have here? Bitcoin is at 27,000. All right, not too bad. Not too bad. Palantir will moon on October 27th. Are you saying that because that's my birthday? That would be awesome if it moons there. That's great. I was heavy in SoFi and I recently sold. I needed to stop rocketing. This is the hard part, right? When you're heavy in something and then you sell a little bit and you're just like, oh boy, where is it going to go? I was just there. Amid reading some comments from a Seeking Alpha article, surprised me that some people think that Palantir is not an AI player. Thoughts? Anyone who thinks Palantir is not an AI player has not done the due diligence. It's just like people who say SoFi, like, is nothing other than just a bank. It's like, yes, it's a bank, but you've got to understand all of the reasons why people are excited for just a bank. And when you do that due diligence, it becomes very obvious, especially at the fucking market cap it is right now at 5 billion, all the catalysts that exists for SoFi to have a good rally over the next year and a half. Anyone who says Palantir is not an AI player has not read the case studies, has not watched the videos, has not read the articles, has not listened to I mean, this was Jim Cramer, right? The CEO of Jacobs, by the way, the press release we talked about at the beginning of the show. He's the guy who went on Mad Money and convinced Cramer to not be so bearish about Palantir because he said it's changing our business, my guy. Like it's literally making us more effective and efficient. And as a result of that, you shouldn't be as scared of Palantir just because Karp is banging on the table. So I think it's just ignorance at that point. And it's important to understand Palantir more deeply from an AI perspective. Now, remember, anyone can write anything on Seeking Alpha. So if they haven't done the research, I wouldn't expect them to know it. But it's the same thing. It's the same way about me. If I say XYZ company is not that, like me on Netflix, my whole thesis has been, oh, the content sucks. I really didn't spend that much time watching Netflix. And I over the past couple of months, I just started going through Netflix. I'm like, oh, there is some good content, right? One time when I got my root canal, I watched this one series in 10 hours. I was like, no other streaming platform on the planet besides HBO Max, but that's a little bit different because it's way more premium, can make the type of content Netflix makes. And so my due diligence led me to believe my ideological thesis on Netflix not having good content is bullshit. I was wrong, right? And I think it's ideology if people say Palantir is not an AI player because they probably just aren't reading the case studies on what's going on with Palantir. Thank you to 600 people being here. We've got 600 on the live stream. That is 2 days in a row on 600. Thank you all for being here. Apple is paying more interest. SoFi, beware Apple, the future big time bank. I think this concern is also a little bit misguided. Let's get back into the charts and then we'll get into some of the depth ceiling coverage. The important thing to understand about Apple, in my opinion, is that Apple is going to be a big fintech player, 100%, but it's not a bank. So like Apple's not giving you a mortgage, right? Apple's not doing your student loans. Apple, you can't invest on Apple. Look at SoFi just rallying like a mother effer right now at 8.29%, doing a great job. Apple is not priced in to be the world's biggest fintech, even if you can have your savings account there. SoFi is, and SoFi has, and Apple doesn't have a AWS of fintech type of stack like SoFi does. Galileo, which is the company they bought for $1.2 billion in April of 2020. It's a payment processing API. So every time you swipe a card, based on whatever service it is, and based on the person who made the card, for example, Robinhood's debit card, SoFi gets paid. Just like every time you watch something on Netflix, Amazon gets paid because Netflix hosts all their content on AWS. And so there are so many catalysts to SoFi that Apple can't encapsulate. Will they take some market share? Maybe. But the reason SoFi is exciting is because it's a one-stop shop for all your financial services. So if you're doing checkings and savings with SoFi, you're also going to do, potentially loans with SoFi, mortgages with SoFi, et cetera, et cetera. You're not doing all that with Apple, even if you're stuck in the Apple ecosystem. And so that's why I think the Apple argument is just not that bearish on SoFi. If anything, it's good for SoFi because that means more people are getting into digital banking. NASDAQ rallying back up to 13,000. Apple at 178. I think investors are really excited about WWDC. And this is the momentum that's going to happen in terms of their headset. I am so not excited about that. This is a stock that's at $2.8 trillion. I don't think Apple is a buy at $2.8 trillion. I just do. I think there are way better opportunities in the market, even if Apple is the best company on the planet. But again, that's my ideological thesis on VR, and that hasn't been changed yet. And if that changes, maybe I'll change my mind. But I don't think that valuation is worth a buy at Apple. Shopify at $59, not giving up its earnings decline as well. Duolingo, look at that at 152. The stock was at 70 a couple months ago. This one has been a badass performer, going up to 172. Nvidia at 397. And where is Palantir? Wow, look at that. Look at that. Rallying right back up to 1440. It's down 2% on the day. Look at that. C3 AI also is rallying up a little bit. Okay, so you see when this rally happens, we see the whole market shift a little bit. Meta is rallying up back to 261. It was just at 258. C3 was just at 39. Now it's at 40. So it's down 8%, not down 11% anymore. Snowflake is up 3%. Where's Nvda? Nvda is just down 0.69%. All of these are moving in tandem with each other, which is very interesting just to see how it's kind of interacting in the S&P at $418 right now. Palantir is fighting back. Palantir is absolutely fighting back. Get on the PayPal trade. So here's my big thing about PayPal. Again, I don't think they have a moat outside of their network. They might be as undervalued as Meta was at $88. It might be like the steal of the decade. But what is the moat? Meta's moat was 3 billion users and no competition. PayPal has a lot of competition in terms of Cash App and Nubank, like just a SoFi, just a variety of different services that people use to send money, Zelle, etc. Now, I know PayPal is much more integrated than all of them. The problem is Meta 3x'd in like 5 months. PayPal going back to that 240, 250 level from 60. I don't know how likely that is, even in a bull market, because I don't know if investors like fintech enough to the point where they think there's some fundamentally differentiated moat that PayPal has. I think the $340 price that was at in 2021 was peak bubble. And Meta, again, was at 380 peak bubble, but Meta kind of deserved, you could argue Meta could be $1 trillion company. Meta at $88, the next MySpace was probably not justified, right? So that's the only concern of PayPal, but I think it's a good long-term buy right now. I just don't think it's the 3-4x that people are thinking it is like within a year, like Meta was within 5 months. And that's what people think when they make the comparisons to Meta at this stage right now. I have calls on SoFi and PayPal. Congrats to you, Michael. That is awesome. I'm 22 and never used the PayPal service. So I use PayPal a lot, but yeah, I mean, there's probably other fintech. So Technical Trader Wong, what else have you used if you haven't used PayPal? Switzerlandit says, to me, the only reason for Palantir getting Tyson as a customer as the CTO is there a risk of Palantir not acquiring new customers due to the lack of expertise in other companies' management. 100%. Like the CEO of Tyson embraced digital transformation. The CEO of Jacobs embraces digital transformation. The CEO of CNA, which is like the European H&M, embraces digital transformation. This is why the entire sector learning about AI is bullish for Palantir. Let me say that again. Every CEO in the world that is learning about, like I asked my mom today, or my sister, if she knows, or not my sister. It was someone that I was talking to that knows my sister, if they know what ChatGPT is. And they said no. And I was shocked. I was like, how the fuck do you not know what ChatGPT? Like, this shit is crazy. And they're like, what's that? And so you've got CEOs on this planet that don't really understand that AI can make their businesses more effective. The more they know about this, the more the overall market increases for potential clients that Palantir can capture. Because then the question becomes, all right, if AI can increase my business, what software, what company will implement that for me? Just like, all right, I need to have a website. Where do I host it? GoDaddy, Squarespace, blah, blah, blah. I need to have a customer relationship management tool. What do I use? Salesforce, Oracle. I mean, like, these were the tech behemoths, the big tech $100 billion companies that made investors filthy fucking rich, because the entire paradigm of how the world conceptualized digitization changed from 1995 to, call it, 2015. Now we are in a reaccelerated era of digitization that is embracing this thing called artificial intelligence. 2 questions, ask yourself. Is it real? Is it legit? And can it be implemented in every business in the world? Yes, it's real. Yes, it's legit. It's not crypto. Second, can it be implemented in every business in the world, no matter how big it is? Yes. So the final question is, can Palantir be one of the 7 to 8 companies that is able to implement them across the entire world? I think the answer to that question is yes, but that's the risk of investing in them because we don't know. But that's also the fun of the journey of following Palantir. Is SoFi even a huge position for you right now? Yes. SoFi is a very big position for me. It's not up there with Palantir. Palantir is obviously like my biggest, but SoFi is there. And TFC is also a very big position for me as well. Truist Bank, that I believe is undervalued. Okay, let's take a look at Palantir at 1432, C3A at $40. SoFi, look at that, 674, up 11% on the day. Wow. Wow. Yeah, some of these options I have are looking really nice right now. I'm kind of annoyed, bro, because oh man, it's good I bought them yesterday. I bought a lot of options yesterday. I spent $8,000 buying options yesterday because I knew the writing was on the wall. It's time for it to run, and now it's fucking expensive. Now it's not worth buying them today. It's not. They're expensive. They're expensive at this level. Goodness gracious. Yeah, it's up. It's up pretty big. It is up pretty big. So look. Is there going to be a decline on SoFi? I think there has to be a macro-driven decline because the market, look at that, Nvidia is back over 400 as well. The market has to recognize a couple things. The market has already recognized this student loan moratorium on top of GAAP profitability, on top of Anthony Noto basically appeasing every shareholder concern at the JP Morgan conference last Friday. All of that put together is leading a lot of people to recognize what SoFi is right now, which is undervalued. And so, I still think this is a great price, but we could maybe get a better price, but we're just gonna have to wait for it to come down. And that might happen on a day where the macro starts to ease up, but I have no idea when that's gonna happen. Hi, Amit. About a month ago, I requested you to ask everyone from Finance Junkies about how they learned options and what would be their suggestion on how to learn it. Could you please do it next time? Yes. We can ask. I can highlight this question and ask them on the podcast tonight. I think, but Raghu, the answer is very simple. You just go on YouTube. Like, I've been learning about options all week by just like hearing some videos about it. Like, it's actually not the most complicated thing in the world. My mom is learning what options and puts and calls are because she's home. She just had leg surgery and all day she's just watching these videos. And then we talk about it at night. It's actually kind of cool, right? So she's learning about all this type of stuff. So I think it's just YouTube videos. I really think it's that simple. And then the implementation of it, go to marketwatch.com and you do paper trading. And you could trade with $1 billion. You don't actually have to have the money, and you can do some options and see, what you would make on those theoretical strategies and just play with it. And again, I'm not an options expert by any means. I know the very basics of it, but again, the very basics, it took me a couple months, and I think anyone can learn them in a couple months to see what's happening. Okay, let's get into some of what the mainstream media is talking about. The Fed and pausing rates. Let's talk a little bit about this. The momentum for it to continue, we need a rate pause. I think the market has already priced in that we're going to get a rate hike at 25 basis points. And so now it's a question of after that one, can we finally get a pause? So let's hear a little bit about how the Fed is thinking about pausing rates.
Our Chief Investment Officer at Bleakley Financial Group. Before we get to that, Peter, I want to bring you into this conversation that we're having, very heated one on the desk. When you take a look at this market, is this trying to tell you something, this huge boom in AI at the expense of industrial, staples, materials, et cetera?
Well, 2 things. If you look at, let's isolate the 8 companies from the 492 and then throw in the 2000 and the small cap Russell. Well, those 2,500-ish companies are customers of those 8. So you can't have the 8 going up like this while their customer base are experiencing their own weakness. And with respect to extrapolating the AI craze and to think that this is going to be great for the broader economy immediately, and this is the beginning of a takeoff in the stock market, well, the Apple iPhone was initiated in 2007. That wasn't the best buy signal for the broader market, and it certainly was no tell on the broader economy.
Okay. Let's talk about the jobs report now. What are you expecting, and is this going to give the Fed any reason to pause here?
So the estimates.
So this is actually really important. So let's hear what he has to say here about here, because the jobs report is going to be an estimate on, where the Fed is thinking of this. If we have too many jobs, then, the Fed's going to probably raise rates again.
Right now are under 200,000. And if the case, it would be the second month in a row below 200,000. The last time we saw that pre-COVID was 2019. I thought noteworthy was in today's consumer confidence number, where we saw weakness in the employment figures. In fact, those expecting more jobs over the coming 6 months fell to the lowest level in 7 years. So I do think that there's risk to the downside. But again, the Fed wants to see a weaker labor market. I think the Fed is pausing, regardless of what Friday's number is. And Friday's number is backward looking anyway. So
very interesting. So he thinks the Fed is pausing. He thinks the Fed is not going to raise. That is against what the street is thinking.
Any central banker that's going to base their decision on Friday's number is really bad rear view mirror type analysis.
Peter, Tim.
Okay, so I mean, what I'm hearing as I'm doing a lot of research, from various analysts, is that they think the Fed is not going to pause. And here's another reason why they think the Fed is not going to pause. Let's talk about real estate for a second. One of the reasons why buying a house right now is hard is because interest rates are high, right? So my parents got their house at a 30-year, like 3% fixed mortgage interest rate. Right now, it's like 5 to 6 to 7%. So no one's buying those houses because like people are just waiting until interest rates get lower. On top of that, you've got housing inventory declines. What does that lead to? More inflation. It's actually contrary to the Fed is raising rates to stop inflation, but at least from a housing perspective, it might make more sense to pause, because if no one's selling a house because they don't want to pay for higher interest rates, and it's hard to sell a house if you can't stimulate demand, and there's not that much demand because A, there's not as many houses, so inventory is down, and B, no one wants to pay fucking 6% for the next 30 years, when in a couple of years, if they wait, they can pay 2 or 3%, maybe 3.4%. Then you've got this like influx of inflation in the housing sector. And so the Fed has to figure out how to deal with that problem as well if they're trying to ultimately bring down inflation. And it's a little bit tricky, right? What they're trying to do in this situation. So a rate pause, I believe, is possible. But the ideological thing to understand about Jerome Powell is they got inflation wrong when he said inflation was transitory. He does not want to be the guy that gets that cuts rates way too early or even pauses too early. And as a result of that, he's concerned about his own political reputation, which might lead to, him not raising rates or him leading to raise more rates. Amit, do you see another rate hiking resulting in a drop in SoFi? No, I think the market's priced it in. This is why I'm talking about this right now. From everything I read like a bunch of articles this morning. It seems like the market has priced in. We're getting not only 1, but 2 more rate hikes. There are some parts of the market that are pricing in a pause, but I think a lot of the market, Bullard, right, the chair of he said we're getting 2 more rate hikes. He said expect it. And so the market's probably expecting it. So I don't think it's going to lead to a drop in SoFi. Might there be a pullback? Sure. Like an aggressive pullback, like the Wedbush hit piece that dropped this motherfucker to $4.70. I don't think that's happening. And so as a result of that, I don't think that's rate hikes are not necessarily going to do that. Have you guys considered maybe the price action influence because the Finance Junkie plays have been a little too parabolic? Finance Junkies reaches 4,000 people, maybe 5,000 people a day. I'm really excited about that. I don't know if that's enough to move the markets. If we were moving, who moved the markets, bro? When Jeremy sold TTCF, that shit moved some markets. That shit went down like 40% after hours after Jeremy sold it, because I think the float was just so small on that one. And so that's why it went down. So yeah, I don't think we can move markets, not on these big names. Where is Palantir? Nvidia's at 397. Palantir's at 1440, still holding really strong at 1440. Enphase at 172. Google 124. Microsoft, look at that, 335. Microsoft new price target at 375 on the street by Wedbush. Snowflake 164. Snowflake making a little bit of recovery. It dropped from 180 to 149, so it's up a bit here right now. Nvda 397, SMCI at 226, and Target. So this is a company that's been hurt from a political backlash to some of the products they are selling. It has seen the biggest 7-day decline that it's seen in its history. Remember, Target's a very stable company because like Target, Walmart, like these companies don't really go up or down too much. They're pretty stable just because the businesses are very predictable. The political backlash has dropped Target pretty significantly over the past couple of days. And C3 AI now down 9% under $40. The earnings report on this is going to be very important because if their earnings goes to shit and C3 goes down the gutter, remember, it's 100 million share float, 104 million shares. The majority of that has to be retail. There's probably some institutional ownership. I just don't think there's the most institutional ownership. Maybe it's like 15% at max, in my opinion. If that is the case, if this thing drops like a hawk after hours, we're going to see some momentum on that from some of the other plays, even though it probably doesn't deserve to influence something like Palantir. But then again, does the stock deserve to be up 300% in a month? Probably not, but it is. And so I think the entire sector right now is in a frenzy when it comes to analyzing what's going on with AI. Look at SoFi, 12% up. Absolute beauty, $6.81. This stock was $4.70. It was $6.50 on earnings day. It tanked to $4.70. And now it is back up to $6.83. If it cracks $7, it's going to be exciting. If 7's a nice little psychological barrier that it hasn't been passed in a long time. Kramer's talking SoFi right now. Okay, so we'll probably see a little bit later some of his thoughts. The student loans might counteract the rate hike, in my opinion, to an extent. The thing is, there's going to be so many refinancing. There's going to be so many people refinancing that net, it should result in more originations for SoFi to be able to make more money. And remember, when rates go down, SoFi just gets to mark those loans to market, right? And so they'll still be able to make a lot of money as rates come down. Versus just losing them as they're stuck on the balance sheets right now. C3 AI is 40% institutional. Interesting. Okay, so 40 versus 60. So the question becomes: do the high frequency trading algorithms that get a bad earnings report from institutions drop it? And as a result of that dropping, does retail follow and sell it off after hours, or is retail left holding the bag? There were people that bought that stock yesterday at $38. There were people on the planet that did that, and as a result of that, is it going to rally to 50 or is it going to tank? I think it's going to be interesting to see kind of where that happens and how it goes from there. 3 years of payments pause, but terms doesn't change. Yeah, and again, SoFi is a refinancer of student loans. That's actually the interesting thing about them because they'll be able to give some better rates to people than probably what they can get outside of the market. And so that's why a lot of people are going to refinance with SoFi. I have $10,250 in student loans. And so if Biden passed the 10,000 thing, I would have had like $250 left. I would literally like pay my $250 and go on my merry way. But now I probably got to pay the whole thing. I'm not with SoFi. I believe my loans are public. They're not privately held. And so I haven't got an email from them in like 4 or 5 months. Last email I got was like 5 months ago when it was supposed to end in January, but it never ended. So I'll have to figure out how much I pay, but I think mine is going to be like $200-$300 a month. That's going to be my payment. And hopefully I'll get that paid off by the end of next year. But I would not have to refinance. Now, there's other people that went to like med school and have like $250,000 in loans. I went to business school and I learned quote unquote business. So I learned the business of a lot of things. I don't know if I actually learned business, but as a result of that, they're going to have to refinance their student loans, right? Lawyers are going to have to refinance their student loans. These are a lot of those people. And again, SoFi student loans aren't predatory. They're targeting really like people that have really good paying jobs that can afford to pay back the loans. And the reason they got those good paying jobs is because they took out a ton of student loans to get a really well paying degree. So when people characterize SoFi as this like evil student loan company, that's what I thought originally as well, like a couple months ago. Then I did some research and I was like, wait a second. Like the average income is someone who makes like $165,000 who's paying back these loans. This is not someone who's like struggling to make ends meet to pay back the student loans. And so for them, it's just a question of like being able to get those customers back in the door and make some money off of them. But thoughts on Tesla? Okay, let's talk about Tesla a little bit. I think the Ford Tesla partnership is phenomenal. Let's actually look at their stock price right now. I think Elon is a genius, basically being able to license the supercharging network to the companies that are in decline, like Ford and GM. And when I mean in decline, I mean from an EV perspective. I think eventually there will be other things that he can license to these guys. And he's trying to create a universal charger from my understanding as well. And I think him and the Ford CEO talked about like a better port that is applicable across all charging networks. And every time you charge a Ford, Tesla is going to get paid, which is great. Because if you're not going to totally dominate the market from a market share perspective because people are going to want to buy diversified electric vehicles. If you can still make money on the back end from the supercharging network, which they've already spent a decade building the infrastructure for, that's a great sign for shareholders. And look, I contrary to what people think, I am very bullish on Tesla. It's a $630 billion market cap. Could it be $5 trillion by 2030? As crazy as it sounds, if Tesla Energy scales and if they sell 20 million cars, first of all, if they sell 10 million cars, if you do the numbers on it, you put it, I forgot what the numbers are, but like you put a 20, you took its 25% margin, you put a 20 PE, you get to like $30 times 20 PE. That's going to give you $600 a share. So right there's a 3x if they sell 10 million cars by 2030. If they send 20 million, it's a whole different question. If the energy business scales, it's a whole different question. If the autonomous robo-taxis scale by 2030, which I do not think that's going to happen, that's a whole different question. That's what Kathy thinks. That's why she has a $4,000 price target on it. And if FSD becomes commercially viable and they're making 15,000 a pop on these cars in like 90% gross margins, that's a whole different question. So there's a lot of different ways that Tesla has. I think Tesla is one of the best 3 companies you can buy over the next 10 years. The problem is, I never got Tesla when it was super cheap. I mean, I did, but then I bought. So building Tesla into a big portfolio, like a part of my portfolio for me, has always been hard because I'm always buying it at some tough prices, right? At $630 billion when I could have bought it at like 40 billion, which I was, and then I sold, right? And so that's the big thing for me in my portfolio. But I think Tesla is a absolutely phenomenal company that has a lot of room to run. Where is Palantir? Palantir at 14.22, still holding up 14 nicely. Still holding up 14 very nicely with Palantir. What's your opinion on Intel? We've been looking at Intel a little bit more on Finance Junkies. They've got serious competition. They've got a lot of competition with Nvda in particular. I don't know the most about Intel. What I do know is that they have not innovated as much as they needed to. There is a bull case for them that we're exploring, me and Chris, as we do a little bit more due diligence and we're reading some articles. But let me share a tweet right here that Chris put out today, kind of explaining why Nvidia or why AMD and Intel should be a little worried about kind of what's going on with Nvidia. Nvidia is one of, and again, this is why Nvidia's got repriced, because it's one of those companies that's the market is realizing what's going on. So he says, Intel and AMD investors better watch out. No wonder Nvidia tried to buy out ARM. Also, no wonder regulators blocked it. We might be seeing a monumental shift happening right before our eyes. ARM is another semis play that is not public yet, but eventually will go public. So when you talk about the Grace super chip and CPU, GPU that Nvidia is creating, it's just like these results that we're looking at right here. This is not what Intel is producing. It's just not. And so when you think about it from a pure valuation perspective of like, do you want to pay X amount of dollars for one share of Nvidia versus Intel? The question is just growth and innovation and where the world is going in terms of AI and the GPUs that are necessary to train the large language models that the world has discovered is the next, industrial revolution. I don't think Intel is capturing that market, even if they may be slightly undervalued. And as a result of that, it's just not as exciting to think into Intel. Saying you should pay off old debts before investing is Dave Ramsey level. Yeah, Dave Ramsey does not like debt. That's for sure. Dave Ramsey does not like debt. Nvidia and ARM would be the greatest monopoly ever. Yeah. And that's why investors and the regulators did not allow them to buy them right now. Yeah, but don't you think that the fact that the government is backing Intel, it won't get a higher profit? I mean, look, the problem with Intel is they are not innovating at a level that is making people excited to buy the stock. I mean, if you just look at it, it never got back to $66 from its all-time highs in the dot-com bubble. They paid a nice little dividend, but in terms of a growth company, they are not doing what is needed to be done in terms of the AI revolution. And when I say that, I don't mean to be hyperbolic. They're obviously doing stuff, but they're not doing what Nvidia is doing. The reason the market's giving Nvidia that valuation is because they're growing at a different rate. They guided 60% on their Q2 earnings, from $7 billion to $11 billion. I mean, when Intel does that, let me know. But until Intel or IBM or any of these legacy companies do that, it's going to be a lot harder to just be excited about Intel. I would rather buy AMD before Intel. I agree with that. I would rather buy AMD before Intel as well. Miyoko with the daily comment, buy Tesla and hold. That's one strategy for the next 10 years. You can forget about everything and just buy Tesla and hold. Let's listen to Mohammed El Iran talk about what is the best response to the $31 trillion that the United States has in debt. It might not be raising taxes or cutting spending. It might be something else.
The tentative debt ceiling deal reached, many investors will probably turn their attention to what the Fed will do at its next meeting. That starts just 2 weeks from today. For more, we want to bring in Mohamed El-Arian, the chief economic advisor at Allianz and the president of Queen's College, Cambridge. And Mohamed, are you considering this debt deal at this point almost a done deal?
Look, my working assumption from the beginning was that we will somehow sort it out. And it seems like it's being sorted out. I mean, I would very much echo what Josh Bolton just said. It is absolutely necessary for this agreement to get through Congress if we are to avoid shooting ourselves in the foot again.
All right, if that's the case, let's turn our attention to the next issue at hand. And I guess that has to be the Fed meeting in 2 weeks. Steve Leisman came on in the last hour and said that he thinks the idea of a pause is more likely to be off the table at this point, just because the data has not been anything that the Fed could say, okay, here's a reason why we should pause.
Yeah, so I put a piece out earlier this morning saying that if you take the Fed at its word, which is that they are excessively data dependent, then given the data, that they would find it hard to pause. Now, between now and the next meeting, we have a CPI report and we have a jobs report, so this could change. The problem is that because the Fed is so data dependent, even the Fed itself is all over the map. You have those who think we should pause. You have those who think we should skip, meaning you pause now, but you hike at the next one. You have those who think we should hike, and you even have one person who thinks that we shouldn't have hiked. So, this is the problem when you lack a strategic underpinning, is that the data can swing you around. And with that, we swing the 2-year and all over the place.
We've had a number of people who have come on and said, if you're not looking at the banks, if you're not looking at real estate, if you're not looking at the housing market, well, then things look great. How much of an impact do those arenas, though, have on the overall economy?
So I think it is necessary for certain sectors to deflate. And that is because inflation has migrated from the goods sector to the service sector. And the service sector is less sensitive to interest rates. So the bits in the goods sector, housing being the perfect example, that are very sensitive to interest rates are going to get beaten up. And that's what has happened. We also have.
And that's also happening because of the lack of housing supply and the lack of people wanting to buy a house with a 6% 30-year mortgage.
Have private markets that are slower moving, but you've got over $1 trillion of commercial real estate that has to be refinanced. So I do think there are bits that are feeling the impact of the interest rate. Now, the one that I'm not ready to assume away is bank credit. We simply don't know at this point what's going to happen to bank credit. And it's important to keep an open mind on this.
Okay, so what would you be telling people to do at this point? We've heard other people say that the markets seem frothy, especially if you're looking at some of the technology stocks that are really riding AI. On the other hand, you've got Nvda turning in some incredibly strong numbers and even stronger expectations about what they can deliver in the future.
So we've seen the emergence of what I call all-weather stocks, stocks that have one or both of these attributes. They're seen to be riding a massive secular wave, multi-year. Nvda is an example of that. Or alternatively, they're seen as not being sensitive to economic and financial fluctuation. Think of Microsoft as an example of that. And those stocks have basically, as you heard earlier, done all the heavy lifting for the indices. And that's why the Nasdaq's outperforming. That's why the S&P is in positive territory. And that's why the Dow has struggled so much. So the bet so far has been on these handful of stocks. And that makes sense. I worry more about the other stocks that are sensitive to the Fed making another mistake. And if they hike, it will be a mistake in my mind. But then I have a much more strategic view of monetary policy. Or alternatively, if credit proves to be a problem.
Do you like this debt deal, Mohamed, or would you have preferred a clean raise?
So I'm not enough of a specialist, honestly, to know which is better.
You never met a Democratic spending bill you didn't like.
You may very well think so, but that's not correct.
Okay,
I was critical.
But now you don't know enough to know whether you rather have a clean bill or what's in this bill. You really don't know what your opinion is on that.
Joe, I have limited time, so my working
That means he didn't read the bill. And to be honest, a lot of us have not read that bill, so that makes sense. Look, Mohammed El-Erian makes a lot of sense when he's talking about this. There are so many different opinions that exist in the context of what the Fed has to do. Some people want to raise, some people want to not raise, some people want to raise a little bit, some people think we should have never raised. And as a result of all those opinions, the Fed is going to have to boil it down. I think the Fed will raise another time because Jerome Powell has ideological opinions on how he conceptualizes his legacy and how the world will perceive him. And he doesn't want to be the guy that got it wrong. And as a result of that, he's not going to lower rates that soon until we see a meaningful decline in inflation. Palantir at $14. What changes everything is if CPI comes in down significantly. CPI is at 4.9. If we get that bad boy to 4.1 by the end of August, and then 3.7 by December, like, we're going to have to get some rate hikes at one point. The writing's going to be on the wall. It's going to be too obvious. Truflation's down below 3% right now. If that comes down, everything changes. Look at Nvda dropping right now at 393, 1.82%. You got Palantir dropping a little bit. SoFi holding up at 650, but it's not up as much as it was. It was nearing $7. Now it's at 650 right now, declining a little bit as well. And so we're seeing the decline there. Snowflake at 165, Microsoft 333, and Google at 124. Okay, let's do this in the chat. Canada paused a while ago. That's true. Now, Canada is a whole different environment than the United States. You like, for example, the United Kingdom has inflation that's still roaring. So every country is kind of trying to figure it out in their own ways. I'm in the UK where we overpay at will. We only have fixed term rates for a certain amount of years, usually 2 years, fixed term mortgage rate. Yeah, and that's why it's also different with how Jerome Powell's thinking about it, because from a United States perspective, it's so much more complex with all these different variables that he has to deal with. Let's do this in the chat. What are your top 3 positions? I don't think we've done this in about a month. What are your current top 3 positions by portfolio size? What are your top 3 positions? By the way, I just got an email by Jim Cramer. He says, last chance to join my investing club for $300. Get an annual membership. $300 to learn from Cramer that Palantir sucks. That's great. That's worth the deal. What are your top 3 positions right now by portfolio allocation? Palantir, Tesla, SoFi. Okay, not bad. QCOM, MU, SWKS. All right, so semis. Got a lot of portfolio to semis. Palantir, Tesla, Crowd's up there. Haven't heard of that one in a while. SoFi, Palantir, Cash. That's not a bad one. Rocket Lab, SoFi, Palantir. This is a very risky speculative portfolio, at least with Rocket Labs in there. SoFi, Palantir already speculative. Rocket Lab in there. So I'm assuming you're young, Jay, because you're giving yourself time to see that through. Tesla, Enphase, SoFi, and Truist. This is a guy that watches Finance Junkies. That's the Finance Junkies portfolio. Tesla, Palantir, and Amit. I love it. Long Amit. Hopefully long this YouTube channel. We're doing that. Amit, Palantir, Cash. Apple, Palantir, Cash. Amazon, Google, Palantir. Tesla, Palantir, VOO. That's a great one to be in. VOO. Lithium or LTHM, SoFi, UNG. Dogecoin, Beyond Meat, Fisker. That's probably the best one I've seen so far. Tesla, Palantir, DraftKings. Arrow, is there a thesis on DraftKings for you? Is there a thesis on DraftKings? I'd be very curious about that. Chris, I'm all in 100% on Palantir. I just buy Palantir at local bottoms. Next buy range for me is 9.25 to 10.25. See, and this is the thing, it's really interesting to see people that are all in on Palantir because they have their thesis, they're locked in, and the mental piece you must have, okay, so imagine someone's portfolio that has an all-in portfolio at like $8 average, even $10 average, and the stock's at 14, 15. The piece one must have, knowing they loaded up, let's say, hundreds of thousands of dollars at a price they thought was great, and they were actually right about a decent bottom, and now they just have to wait for that shit to play out. I mean, that's how I'm thinking about it. I'm not all into Palantir, but I could imagine what a peaceful portfolio that is. Now, obviously, if Palantir shits the bed, things are screwed. But if you just have enough conviction where you don't think they're going to shit the bed and your average is low enough to the point where even if they shit the bed, you're break even, that's a really nice spot to just be mentally, in my opinion, which is kind of counterintuitive to what most people would think in terms of diversification. SoFi, Amazon, Unity. We just did a deep dive on Unity the other day on Finance Junkies. I'm getting more excited about Unity. I have not opened a position, but looking into it. Palantir, Open, and SoFi. This is definitely a more speculative portfolio. Open Door, I'm looking at more deeply. Let me say that. I'm looking at Open Door more deeply. I'm not buying, but I'm looking at it more deeply, given it's at $2 and change, and I want to take another look at it, but I'm not super into Open Door yet. Tesla, Amazon, Enphase, Oxy, Amazon, Palantir. That's a great portfolio. That's a good one. Palantir. Jeremy, shout out to you. Jeremy, I'm going to do a podcast with Jeremy one day. He was messaging me on Instagram. This guy's life story is amazing, and what he's doing for himself through financial freedom is amazing. And yeah, I'm happy you're part of this channel, Jeremy. We definitely got to talk live one day, get people to know who you are. Palantir, VLD, Tesla. I've heard about VLD. I've not dived deep into it. I got to take some time to dive deep into VLD. Palantir, Tesla, XRP. Okay, so we got some crypto. No one has said Bitcoin. No one has said Bitcoin yet. No one has said Bitcoin. Interesting. No one has said Bitcoin yet. Tesla, Palantir, Rocket Labs. Oh, wow. DRK. I didn't know you were into Rocket Labs. I didn't know you were into Rocket Labs. That's great. Amit, are you in calls for TFC or shares? I'm in the options. So TFC, I'm in the options, no shares. You know what's interesting today? My mom, she got a dividend from TFC because she has like, 20 shares of TFC or something like that. And she got like $44 or whatever she's getting. And she was like, why am I getting this dividend? And it was so cool to explain to her, like, well, you own the company. They give you 8. That's the cool thing about owning. I don't have any dividend portfolio. I'm waiting for a substantial amount of capital that I can just lock up in dividends for a while and not look at it. I don't have that capital yet. But it's just so cool to get dividends because she literally got paid just for holding the stock. And I think it was cool for her to actually see kind of what that looks like. Palantir, Amazon, Amgen, HIMS, Stein. And I've seen STNE before. PSNY I've looked at as well. HIMS I'm looking at much more deeply as well, given it's had some phenomenal earnings over the past couple of quarters. Palantir, UBX, FRBK. FRBK will break out huge net week. I have no idea what FRBK is. Thank you for the superset, Sergeant Fighter. I'll dive deeper into them and look at them a little bit more. She knows about options, not dividends. Yeah, that's the funny thing, bro. Like my mom, you got to remember, she's 53. She's never learned about the stock market. She's only learning about it because I talk about it. So she and with options, she knows what a call or a put is, but that's it. So she's learning a lot more, but it's super cool to see her get into all this stuff. Stone is Stone Co. Yes. And Warren Buffett and Cathie Wood at one point owned STNE. I don't know if they have allocation to it anymore, but I know they did. Speaking of Warren Buffett, let's take a look at Buffett's portfolio allocation. Farzad tweeted this yesterday, which was a really great chart. And I didn't even get a chance to really look at that chart deeply. But let's look at what Berkshire currently owns. Sorry, guys, computer, the camera went black. I am here. Let's share that right here. Okay, so this is what Farzad showed. This is, it might be a little hard to see, but this is what Berkshire owns. I can zoom in. Cool. So they have a ton of Bank of America, Activision, Blizzard, Ally. They have a little bit of Amazon. They have a lot of Coca-Cola for some reason. I don't know why they have so much of Coke, but I guess they don't like Pepsi. They have Visa, T-Mobile, have a little bit of Snowflake still. Remember, they made $800 million on the Snowflake IPO, and that's like one of the tech stocks that they're long on. Charter Communications, Chevron Corporation, Citigroup. One of the predictions Farzad had is that they will sell off this BYD, this 108 million shares they have, and they're going to buy Tesla with it. Now, I don't think they're going to do that because I think ideologically and dogmatically, Munger and Buffett aren't fans of Elon, even though they respect him. And they could have bought in at 200 million, as Elon said, and they didn't do it. So I don't think that's going to happen. But if that does happen, that would be really interesting to see kind of where it plays out from there. TFC is pretty legit, not going to lie. It is legit. TFC is one of those companies, man, that's like, it's undervalued right now. It's undervalued. And, me and Chris have done a lot of due diligence on TFC, and we've done that publicly, but this is a stock that is trading at like below 1 or it's trading on a 6 times PE. It's below book value. Banks usually trade at around 11 to 12 on a PE basis. Depositors are healthy. They're a super regional. They have $420 billion in deposits. They're the 7th largest bank in America by deposits. Tesla down at 197, and they got lumped in to the Silicon Valley Bank FRC craze, and the market took them to prices they haven't seen since COVID at $25. And they pay an 8% dividend. Like, this is when they have a nice earnings, the market's going to wake up and realize what is going on with Truist. And they already have, as it's gone up. Oh, under 30 right now. So as you can see, the market's being a little bit more bearish on banks today. Western Alliance is down. PacWest is down. And as a result of that, eventually in 2024, especially when the Fed cuts interest rates, we're going to see some momentum in some of these regionals that have been beat up. NASDAQ under 13,000 at 12,940. Enphase at 171. Palantir below 14. Down at 5%. All right, so we're seeing a little bit of a decline. We're seeing a little bit more of a decline. Nvda at 391. Nvidia's down 2%. Supermicro down 6%. So where's C3 then? Where's C3 right now? Wow, C3 down 13%. C3 is down 13. Tesla even below 200 now at 196. So we're seeing a little bit of a red decline overall in a lot of these AI plays. Alibaba down at 77. Arc Innovation at 39. I'm waiting for Kathy to buy again. I think she's waiting for Palantir to get to like $10 because she probably doesn't want to pay at 12, 13, or 14 at this point when she was buying at 9 or 10. So she's up currently on her Palantir. She's probably waiting for it to come a little bit lower for her to load up again. She did buy a bunch of Zoom last week as Zoom declined on its earnings. Open Door up 0.37% right now. Amazon hitting 120. Look at that. Amazon was at 106 just, I think, 2 weeks ago. Amazon now at 120. And Robinhood was at $9 pre-market. Right now it's at 880. AMD at 120. JP Morgan at 135. SLG, nice 15% dividend per month REIT, $22.60 right now, stuck at 21 about a week ago. And Palantir continuing to be $13.97. So it's fighting still at 14. Now it just hit 14. So it's stuck in that 13.90 to 14 range. And it's fighting there. Amit, what would it take for you to invest in Tesla if you already kind of believe in the story? So remember, I did have like 20 shares of Tesla, but I consolidated my portfolio down to some of the regionals. So I sold out of some Tesla. I sold out my Tesla to be able to get into Truist in the options play that I did because I needed a lot of cash to be able to do that. So, I mean, again, I didn't have a hefty position. I had 20 shares. It wasn't a lot. I still believe in Tesla. It's not that I don't believe in it. It's just at this point, my portfolio to be able to build a substantial position. Remember, I'm 25. I need to solidify like maybe 3 to 4 positions that I deeply believe in and let them ride. For me to do that on Tesla, it's just going to cost a lot of money. And right now I don't have the capital to do that. So, and the convictions there more for Palantir for me because I just get Palantir more than Tesla. Not saying I don't get Tesla. I think I understand it a lot better than I did 6 months ago, but it's just, it's a little bit more pricier than Palantir. And I think the upside exists in the short term on Palantir over Tesla. So that's all it is. But Tesla is absolutely still a great company to buy at this point. Tesla will be 6 to 10 trillion if Master Plan Part 3 plays out. I agree. 100% agree. 100% agree. And I think it's not as crazy as people may think it is. Now, FSD needs to work in order for this to happen. And if FSD is not working, it's going to be hard. And that's what Elon said, right? That the difference between Tesla being 0 and a lot is FSD. So I think that thesis has to play out in person. And when that thesis plays out, then there's going to be a better shot. What's your thought on traditional hosting firms and others like Fastly and also cybersecurity, a type of pick and shovel? You know, this is interesting. The cybersecurity play, Palo Alto Networks, CrowdStrike, I think a decent amount of due diligence has to be done into the overall sector. And cybersecurity is important. My startup, Audia.io, if you guys want to check out Audia.io/register, we're trying to build the YouTube of audio. We had a DDoS attack. If I'm saying it correctly, I might be saying the acronym wrong. Forgive me for that. But we had an attack, or DDoS, I believe. I still might be wrong on that. Like a couple months ago. And that's the first time I realized when I was on the Zoom with my CTO trying to like stop that shit. Some dude in the Netherlands was trying to fucking hack our shit. We're like, bro, like relax. Why are you trying to like? That's when I realized cybersecurity is a big deal. It's very important. And so like that was my first introduction to the world of cybersecurity. Outside of that, I don't care about cybersecurity. Like from a political perspective, Russia, China, they're trying to, like, I just don't care, right? It doesn't get me excited. And so I don't think if you're not excited enough to understand the industry dynamics of that, Palo Alto Networks and CrowdStrike don't become exciting plays to even look into the financials. For me, I'm very excited about AI and the implications that has. And so Palantir becomes a natural fit. Tesla becomes a natural fit to just look at, financials. SoFi becomes a natural fit as a fintech platform. But cybersecurity is not interesting to me. So if I had to pick one, I would pick the overall AI play, not just a picks and shovels play within a niche industry of tech, because I don't understand that niche industry as well. But I think if you understand the niche industry, that would be a better way to think about it. How much concentration in each of your positions do you have at the moment? It's probably split between Palantir being the highest. Like I have one biotech that's about 5% of the portfolio. Palantir's close around 50. And then some of the options I have around SoFi and Truist would make up the other 47, something like that. So it's really consolidated, the 3 or 4 plays. That's it right now. And I'm making these bets right now because I think these are undervalued assets. This is the time where I want to make heavy bets. I think we are riding back the market being down for the past 2 years. And as inflation comes down and the Fed has to cut rates, things in 2024 can be very interesting. And I think this is the time to make these decisions. And I don't want to be indecisive about it right now. I could be wrong, so we'll see where it goes. But when you're a little bit younger, you can afford to be wrong on this. And I'd rather afford to be wrong now versus not take that risk and not see the capital appreciation from there. With everything going on, digital and AI becoming so big, cybersecurity is going to be huge. And that's true. I just haven't done the research on that, but you're probably right about that. You are probably right about that right now. Did you look at SoFi today? Yes. Let me pull up the charts again. SoFi's, where is it at right now? Is it still at 650? Are we still there? 13.99, Palantir at 14, Tesla 197, SoFi 654. Again, the reason SoFi is mooning is because the student loan moratorium being done with and student loans having to start being refinanced is where the market is getting excited about SoFi. Gap profitability is on the horizon. This is going to be a fun one. The other thing about SoFi I haven't talked about is the retail community. People love this company. I think the retail community on SoFi might be even a little bigger than Palantir, at least on Twitter. Like when I see people tweeting about SoFi, people are actively talking about this company, even though there's not that much to talk about because it's a bank, right? But still, people want to talk about it, including myself. So I don't think retail is going to sell at $15 for a 2x or 3x. I think retail, like Anthony Noto, remember, he is buying hundreds of thousands of shares almost every month. He's put $10 million of his own capital into this company. There is no greater shareholder alignment you can ask for other than the CEO saying his personal money that's like reserved for him and his family is going back into the company, even though he has a shit ton of shares. And by the way, if the stock reaches $25 by 2026 and it stays there for at least 60 days, Anthony Noto is going to make like $500 million in PSUs, which are performance stock units. He's very incentivized to drive this motherfucker up to at least a 4x from here at 650. And so I like that. And even Palantir doesn't have that level of incentivization with shareholders and management. SoFi does. And so outside of all of that, the bull case is that if they're getting millions of members per quarter, which is what Noto said could possibly happen in the next couple of years, if you do some of the numbers, you could have 30 million members by 2030, all of them getting mortgages, car loans, anything from you investing on your app. There's just so many ways to monetize and upsell. Student loans obviously are not going anywhere because you are that one-stop shop for finances, and it's trading at $5 billion right now. That's the exciting bull case on SoFi. And so it's worth looking at least. It's definitely worth looking at. Missed the SoFi boat? I don't think you have. First of all, we might see a little bit of decline on SoFi, but at a $6 billion market cap, you have not missed anything on SoFi. You missed it when it was at $4.70, but a lot of people missed it at $4.70. So that's nothing to be super sad about. SLG Weight Watchers. Okay, where's Weight Watchers? This was a Chris play. People, okay, please do not go into Weight Watchers. Chris got this bad boy at $4 and he was screaming about it, and all of us didn't take him seriously. It ran up to $8 and he took his fucking profit, right? And so if you don't know anything about Weight Watchers, don't get into it because there's a lot of issues with Weight Watchers, but he got it at a really attractive price, and so he was able to time it correctly. So I would suggest, in my opinion, there's other opportunities than Weight Watchers, to be honest. And then SLG is great for the dividend, but remember that dividend can get cut at any moment, right? If they don't want to do 15%, if they want to do 12%, 13%, etc., they can do it. Commercial real estate is in a really interesting area right now. The only reason SLG is exciting as one of the largest commercial real estate REITs in America is because they're in New York City. They're in the city that never sleeps. And work from home, even though it's affecting the entire planet, New York City is New York City, and New York City is different from San Francisco. So, and they own, Class A buildings in New York City. These are like the buildings with the ping pong tables and shit that Facebook rents out. So that's why SLG is exciting, but it is very important to keep updated with the commercial real estate market. I currently have no exposure to SLG. I liquidated that position. I had like 200 shares to load up on Truist. And so the regionals, in my opinion, are some of the more undervalued companies right now. There will always be waves of innovation on AI, first chips, then something else, and then eventually some big ideas that build applications and disrupt AI. Any thoughts on what that might look like? This is a great question. So any thoughts on big ideas that build applications and disrupt using AI? Anyone can answer that in the chat. I would love to see what some other people think in the chat about this. I think there's a lot of things that could happen. For example, here's a simple example. And this is why the most excited thing, by the way, I'm streaming Palantir's AIP live tomorrow. One of the presentations I'm the most excited about is the Cardinal Health presentation and the other healthcare provider. Who are they doing it? Hold on. Palantir, AIP. I want to get their exact name right. They are doing it with, what's their name? Cleveland Clinic. I want to see how they're using AIP for drug discovery. So to answer your question, I think one of the biggest applications that are going to disrupt industries using AI is pharmaceutical discoveries. Like for a hospital to be able to find out that there are all these variables together and they can use artificial intelligence to kind of pinpoint and pattern recognize the companies, or sorry, the diseases, the variables, the external molecules that make up a certain type of disease and or cure to that disease, that is life-changing. You know, we talk about AI in the context of like YouTube will get smarter to recommend my videos. That's really important for me. That matters. But like we also kind of need AI to make sure people don't die because, you know, there's cures to their diseases, and there's hundreds of thousands of diseases we don't have cures for. In the 1800s, bro, if you were sick, if you got the flu, it was over, and things have progressed. Like, could you imagine by 2500 if you get cancer and still die? Like no, there might like we're gonna figure this stuff out. I'm not gonna be alive, and y'all are probably not gonna be alive. But our grandkids are not going to have to deal with some of the diseases we have today and not having cures to that. And so the idea that technology would be able to advance that and be able to bring that to another level, I think drug discovery is a huge world that AI can disrupt. And that's going to be interesting to kind of see how it plays out. Amit, is AMC about to go bankrupt? Bro, I have not heard about AMC in so long. What is AMC stock price? Where's AMC? AMC's at 440, down 3%. I don't know, bro. If you're in AMC or GameStop, again, it's kind of gambling in my opinion. I have nothing to say about these two stocks other than they were meme mania. And when Palantir gets compared to these types of meme stocks, I throw up a little bit in my throat because I'm like, are you insane to compare these stocks together? But could it go bankrupt? I have no idea. But I know that it's probably not the most exciting one to look at. Facebook, Amazon both require the internet, maybe a personal data solution that allows us to trade our data instead of a big farm for ads. I've seen solutions like this. I'm not the typically most bullish on this because here's the quick thoughts I have on this. The only reason data is valuable is because it can be monetized. So we call Facebook and Google like these data farms. I think it's very hard to create a network effect at scale where there's billions and billions of pieces of data that actually pay people for their data if that data is not effectively monetized. So a company that's trying to do this is called MePrism, M-E-Prism. You guys can look that up. Palantir actually invested in them and their Foundries for Builder cohort. And they're trying to help you monetize consumer data. I just think it's hard until you have a lot of people using one product. And then the monetization of that data is what really makes that product free, i.e. Twitter, right? The reason it's free is because of ads. And that's what makes it effective because the algorithms are able to then match people with the correct content to discover. So I think it's very hard to build a network at scale that rewards you for your data if it's not being monetized. But you also have to deal with some of the, ethical issues around what it means to take people's data and then monetize it, potentially at the expense of their own privacy. Okay, I think that is it for me. Thank you everybody for being here. 488 people still here, 1 hour and 12 minutes. We had about 500 at one point in the live stream, so thank you all for being here. That is pretty much it for me. Now, I have a couple videos coming out today. One, the Palantir bankruptcy for their SPAC, Wejo. I'll be explaining that, what happened with them. So for those who were curious about that, we'll be explaining that, and we'll talk about the implications about what that means for Palantir. Second, the Palantir-Jacobs partnership. Rewind the beginning of the stream. We talked about it for about 5-7 minutes. I'll do another video going a little more deeper in that, and we'll discuss that. Palantir Daily Shareholder Club meeting. We'll probably be doing that around 8:30 p.m. tonight. So we'll be live tonight doing that. And then Finance Junkies, 10 p.m. We'll be live, and we'll have a lot to discuss as well. So we'll see where this market goes. Obviously, we're having a little bit of a red market. Palantir's holding up well. SoFi is doing great. We'll see where the rest of the market goes tonight and keep it going from there. All right. Thank you, everybody. I appreciate you being here, and we will see you a little bit later tonight. Have a great day.